Good morning, good afternoon, good evening, depending on where you are in this world. This is Hedge and Nee with a morning update. Yes, I'm traveling across time zones, so my morning is later than usual for maybe what had been. It'll probably come back soon to a normal earlier time. So I am traveling. Here we have what I was referring to yesterday. And if we draw the lines to this symmetrical triangle, it'll be interesting to see if price will breach out of this. So it's by now you should be very familiar with this type of symmetrical triangles. I mean, you're seeing it in MACDs, you're seeing it across cryptosphere. And the reason for that is because of the sentiment being so uniform. I have yet to find probably uh, a, um, a coin that is inverse to Bitcoin. I have yet to find an instrument of any kind, whether it doesn't have to be a crypto, but any instrument, financial instrument, bond, equities, or whatever it might be, that is inverse to Bitcoin. The only thing that I would make an exception to will be anyone going short. But even then, that has to be perfectly correlated. So there is no inverse instrument to Bitcoin. The only thing that I see is high level of correlation, not lockstep, one to one. No, that'll be silly. But rather, it's because sentiment is uniform across cryptosphere, you're seeing a good degree of correlation. Now, if Bitcoin breaks out here, you bet every coin is going to pretty much follow one way or another to their own degree of trend. What I mean by that is one altcoin might jump 10%, another altcoin might only jump 2%. That is a degree of trend specific to that coin. So for today, let's see if this top white line can be breached. What I find a little interesting is if you zoom out here, well, I had shown here how we have a V-neck, 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 and none of these past occurrences it didn't kind of go flat. There was no flattening area. But in this one, we're seeing exactly that. So in this one, it's almost like a landing zone. So it's almost as if saying that sellers are getting even more tired, more sapped in their strength. And that is why quite often when you see multiple rounded price formations, maybe even a three, triple, you're seeing exactly this kind of reason of kind of a landing zone, a final level of consolidation. And I think here the fact that it's going more sideways in a symmetrical triangle is very interesting. And if we look at the volume as well, yes, and the volume is severely declining, as you can see. So if we have a breakout, what do we need? We need a monstrous volume. We need volume to take off like crazy. So I think today we should see a resolution of some type. We could see a breakout today. Now, apex is not until 15th, 4 days out. So this could decide to take like this as well. It really doesn't matter. In fact, I always prefer a breakout closest to the apex. Why? It is more sustainable. Why is it better to have it closest to the apex? You've sapped a lot more sellers that way. If you're far away from the apex, like breaking out here, there's quite a bit of sellers still remaining. That's why. Now, I know I've shown the longer term from 1, 2, 3, 4 wedges, but I'm making this into one bigger wedge. And the MACD follows quite well. Okay, this is a 6-hour chart. I used to use the 4-hour chart, but it really doesn't matter though. The confirmation role of MACD to the price action is very well correlated. And even in the 6th one, you see the histogram, the red histogram is giving higher and higher lows, and now it has been positive since April 1st, right here. Now I want to take this out, and I want to show you that rounding effect, which is why yesterday I also gave this as a potential. Could we get a rounding bottom? That would be very interesting. So that's still on the table. And if that's the case, we could be going through what I've been calling the basin phase, the flatline phase, the sideways phase, where it's putting in the basin part of the rounded bottom pattern. And then after it breaks out, it'll start making the right wall of the pattern. And that'll be done through an impulse. And it could be that what we really need to do, see this line of resistance, is break this 11,800. Anything below that is a bounce. The reason why I said that is that 8,000, come on, 800 has been the level that was repelled, going all the way back to here. Once, twice, 3 times, and I think it might even get repelled again. But then again, after that, if we can break out, better it'll be. So remember to use horizontal resistance and support levels as well. All right, that's it for this morning. I hope you find this to be helpful. I hope this augments your due diligence to help in your decision-making process. Have a good day and much more to come.